It's not what you get, it's what you keep that matters. You spent years building your business. Now you're selling. And a huge piece of those proceeds is heading straight to capital gains tax. What if you could legally cut that tax bill to nearly zero? The IRS lets qualifying real estate professionals offset rental losses against active income. You need at least 750 hours a year in real property trades: development, brokerage, management, leasing, or operations. Here's the play. Plan your exit. Qualify as a real estate professional in the year before and in the year of the sale. Sell the business. Then lever the proceeds 2-to-1 into commercial real estate. A cost segregation study breaks the building into components. The shorter life portions qualify for bonus depreciation, often 22 to 30% of the total purchase price. For every dollar of proceeds, you add $2 of debt. The first year write-off can offset 50 to 100% of your original capital gain. Done right, the tax on the sale of your business can effectively disappear. And because your dollars are now invested in cash-flowing real estate, you've also solved for a low-risk, high-yield home for your capital. You've effectively invested with the house's money. Visit www.cre-fund.com to schedule a call.